Greetings traders, this is a really important video because here I'll be showing you examples of how you could actually use moving average both as analytical and as a trading tool, because I have always said simple yet robust trading approaches work and they will make you most of the money because they're durable, they work across different markets, they work across different time frames, and if you use risk management wisely, they could bring you a fortune. But you have to make that right. You cannot make silly mistakes. You cannot underestimate risk and think that you are delusionally somehow better than anyone else. That's not going to work. But here you will see how this will work. So let's roll on and let's start this practical video. Let's simply see now how they will work from perspective of exponential moving averages. Now we have daily chart of Nvidia and we will have exponential moving average set. So now as you see, it's only on 9 days. So what does it mean? It is really close to that price. And what we see now, it works relatively well if markets have price movements that are strong, and if prices really swing. For instance, now Nvidia has moved from 80 to 139, so that means that 9-day moving average actually gave us opportunity to enter markets at 88 and sell them at 126. That's pretty staggering, I would say, and it still made us money making opportunities once it had those, I would say, relatively short moves, because here from the range of 100 till 130 we will still had both nice long and short trade entries as well. So even at 9 it works wonders. So yes, here also it works well if prices are moving strongly, but here you will see the problem. Once there is no price movement, for instance here from 40 to 50, it's not that good. But as that happens with any indicator, there are places where it works and there are places where it doesn't work. So as you see, something like 9-day moving average works if prices are strong, but let's add to this something and change it slightly. Now we have 200-day moving average on Nvidia stock. Now, as you see here, difference is substantial. If previously we had trading opportunities all the time, here we simply were able to buy it from January 2023 and hold it right up until today. So actually you will be able to buy it from $18 and hold it to $147. That's one deal, and you are simply forgetting that everything else is needed. One trade, one indicator, and you are holding your trade for years. And let's stack those trading indicators together. Excuse me for coloring, but here you could see the clear difference. How many trades actually you have when you are short-term trader with 9-day moving average. You could have 1, 2, 3, 4, 5. You could actually capture like 6 short-term trends and quite a bit of whipsaw trades. But you will still be in the good profit because markets have good swings. Or in another case, you will simply have one trade as opposed to like 30. Which strategy is better? It's all up to your risk management, but you will see that all these price swings were your profit opportunity by simply using crudely simple moving average system. But let's see how this works for a couple of more markets. Now we have the second market, and this is completely different market. This is euro against dollar. Let's add this also to daily chart and let's add moving averages and see how they would actually look like. Now here, as you see, with 9-day moving average, it's relatively choppy. As you see, we have a lot of fake trades without any kind of real trading opportunities. As you see, for instance, here prices went from $1.12 to $1.04, but I would say you would making much money here because you are constantly whipsawed. Here as well, prices went upwards from $0.68 and then it went from almost $1.12, but it was hardly pleasant ride, so you probably will be break even in this trade rather than making money. Because, well, euro against dollar is not as strong market as Nvidia was in the last couple of years. So let's see, maybe it would look better if we are changing that moving average to longer term moving average. Now we have 200-day moving average, so it is really a long-term indicator. And here you see things are a bit different. So yes, here you could actually make money for these longer term moves, and for these shorter term moves, I would say here you, strictly speaking, I would say you probably will be break even for the last couple of years if you simply traded on 200-day moving average, because prices went in relatively narrow range. But if price range was strong as it was at that time with Nvidia, now you have good money making opportunity in euro against dollar as well with 200-day charts. But let's see how they work together. Now here we also have both 9-day and 200-day moving averages at one chart, and you clearly see the difference. For many markets that 9-day moving average is not the best market, but 200-day moving average works almost in any market. So that's my own conclusion. Shorter the moving average, the stronger trend you need. And if for instance you have daily 9-day moving average, it could still work great if markets have strong move. But if you have choppy markets who doesn't have that strong trend movement in its nature, it wouldn't make you any money. But something like 200-day moving average, as an example, it works almost always at long term. And I would personally say, even if you are buying it on S&P 500 and holding it for years, it would actually work better than buying and holding as an index investor. Let me give you this example. So for example, here now we have S&P 500 on daily charts, and now we have 200-day exponential moving average. Let me give you one cool strategy with it. Simply buy when prices are above moving average and liquidate that positions if they drop a lot. Do not go short, use it only as a buy only strategy. And here you could actually make strategy that makes money better than index investing. So that proves moving averages work. Now, of course, it will depend how much you risk and what's your position sizing model, or namely, how much of your capital would you risk when you are buying your position and placing these stop losses. But still, as an idea, as show it how powerful this strategy is, you could simply test it yourself. Just simply compare this. Go to last 15 years, like we could have now, from 2011, 2010. Go long only above moving averages and see the results yourself. It works. This strategy works. And remember, the closer the time frames, the closer the moving averages, the more volatile markets you have to have. So deadly simple and effective would be a long-term strategy with long moving averages. It will work and you will make money across markets provided the markets trend. But if markets are moving in strong trends, you will make money all the time. But then you have to have the strongest markets, the best performing stocks, cryptos and markets like that. They will give you wonderful trading opportunities. But to see this in better detail, watch how I trade on my free Telegram channel, because there you will see many practical examples how you could actually pull those moving averages on across markets and across time frames. You will see additional analysis in more length than I'm showing you now, and you will get trading signals based on these strategies. All of this is for free. All you have to do is visit my link below the video and join me. So thanks for watching this important video. I hope it showed you how moving averages work and that in fact this simple strategy works, provided if you have risk management and position sizing plan, because throughout generations this has been definitive trading strategy which has made the most money for most professional traders. And here you had a glimpse how you actually could use it at different markets and on which markets and on which conditions it works and which it doesn't. So it's up for you to decide how this is done properly. Thanks for watching and till later.